charts, realized volatility on Bitcoin moving higher by about 8 points to 45%, whilst Ethereum realized dropping by a similar amount down to 72. That still does leave the realized spread at just shy of 30 vol points, right? Just to show you, even as they are both converging, we're still only back to around 28 vols in terms of that relative spread. Front-end vols in Bitcoin were up about 4 points on the week, and Ethereum lagging behind, only up 1 to 2. Carry, which is a difference between implied and realized, is around 0 in both Bitcoin and Ethereum, suggesting that short-end vol is very well priced right now, how we're moving. But if you look at it, last week's, the OHLC charts, which kind of show the high lows and how they look relative to the implied moves, you can see you had some quite tight moves, quite narrow moves on most days. It was only that day that Trump announced the tariffs that we really had that big move lower, breaking below the implied range. But since then, we kind of stabilized. Same thing with Ethereum, right? So the realized vol is somewhat flattered by the fact that we had that big move on Friday. Without that big move, we actually would have much lower realized numbers, and that's something to be aware of. And then the upside break in crypto is happening, albeit in slow motion, it looks like at the moment. Like I said, I do think this is underpinned by quite a lot of institutional adoption coming in, buying the ETFs, and that is supportive. And that means that this rally may be more sustainable rather than just a flash in the pan like we often see when there's a lot of speculative momentum building up. This is much more consistent inflows that are driving a nice, slow, orderly move up, which is much more healthy, in my opinion, for the bulls. Okay, that's where we are in terms of realize. You can see the term structures here. We did obviously move a little bit higher in Bitcoin as discussed, 4 vols in the front. Not doing too much in the back end, up maybe a third of a vol, something like that. But in general, the curve kind of flattening from a steeper contango to still contango, but not too dramatically. The absolute front end, though, has caught a little bit of a bid here, as you can see in like this week's expiry, basically, right? So slight inversion there, but then it goes back into contango. Looking over at Ethereum, still inversion, because obviously Ethereum is much more volatile, has been for a while. We did see a very small uptick in vol, but in general, still quite inverted, this curve, as it has been for a while. All right, that's kind of where we are in terms of term structures. Time series wise, similar sort of cyclicality as we usually see. We saw a sell-off in the front end vol, before Trump's shenanigans, and then obviously the front end did start to pop, but that's relatively short-lived, the pop, and we are starting to see the curve settle down a bit again. Here you can see it on Ethereum, quite pronounced, that spike in short-dated vol there, and then it kind of sold off again into the weekend. Looking at skew is quite fickle, kind of chasing spot around. So on the initial drop on Trump, we did flip into kind of a 3 vol put skew, 2 to 3 vol put skew in the front. It's only really the front skew, 1 week stuff. The rest of it is much more stable. Then it jumped back into calls on the bounce back at 4 vols, and now it's sitting there at about 2. Ethereum, similar sort of story. We had that 1 week stuff. I've got the 3-day on here still, the blue one, but actually the red one is the 1 week. That did go into puts as well by a couple of points, and then again flipping back through the 0 line back into calls. So similar story we're seeing in both of the assets, with short end skew kind of chasing spot around, but the back end skews or the medium term skews are still very much residing in a small call premium. It's not quite a steep, it's not quite a rich call premium, because even though we're making new highs, flow is coming in call spreads, that is keeping the longer dated call skew in check, right? Because the actual amount of volatility that dealers are selling on the upside isn't that much, because if people buy call spreads, they're buying closer to the money stuff and they're selling the upside to the dealers. So actually, dealers aren't getting taken out of too much upside, it seems, in the call spreads that are trading, especially on Ethereum. And that's why we're not seeing this massive call bid on Ethereum that maybe we may have expected to see, given if Ethereum can really have a catch-up trade. Why are we not seeing more call skew? And that's your reason, right? People are opting to buy call spreads rather than buying outright calls. That might change if we start to see a bit more excitement, a bit more volatility on the upside. But at the moment, that's kind of where we are. Lots of room still for skew to widen out. We've seen skew go well above 10 vols if it really wants to go. But right now, it just seems that the type of flows that we are seeing, maybe it's because, the absolute levels of vol in Ethereum are in the 70s, right? If the absolute levels of vol in Ethereum are in the 70s, then were in the 40s or 50s, then people might just come in and just buy outright calls and say they're cheap enough to just buy outright. But because those at the monies are trading at 70 vol, they're looking at it and say, I don't really want to buy outright calls at this level. I'd rather buy call spreads, keep the Vega risk down. If Ethereum vol does want to come down, I won't get too hurt by that because I've got a call spread. And then maybe I could even buy my short calls back, right? And to that point, if we look at the relative value side of things, front end spread is at about 26, 27, down from closer to 30 because Bitcoin obviously caught a relative bid this week. But, you know, I would say the long end vol here at like 17, 18, where I say long end, like September onwards, September vol around 17, 18, Ethereum over Bitcoin. That to me feels like it's quite high, right? September is not that long dated now. It's like 4 months out. So maybe, you know, December, March are a better place to go because they really are much more Vega than they are Gamma, whereas September might suddenly start turning into Gamma before you know it. But I just think we could get a situation where we go through the summer, we don't get too much movement either way, and, you know, Ethereum starts to move kind of in line with Bitcoin or a bit more in line. We're already starting to see a little bit of convergence of realized vol heading in that direction at least. Then you might see the long end go back to like 10 vols, right? And that's still not like a cheap level, right? 10 vols historically has been quite expensive. It's just that we're realizing so much in Ethereum lately that it's stretched that medium term stuff up to 17. I quite like the idea of banging out some Ethereum September strangles and then buying Bitcoin strangles, same delta against it. That way you can collect some premium, and you've got this kind of strangle swap Bitcoin long, short Ethereum, and just let that thing decay away. And I think there's some money you can harvest off that basically, right? And if the vol spread does reset to something like 10 vols, you'll make some money in Vega and you can unwind the trade, right? So it's not a trade I've pulled the trigger on just yet, but it is one that I am speculating and thinking about because I struggle to see this thing going that much higher in the September. Now, it might be that if the curve just kind of holds its shape as we get closer to September, that September wants to kind of roll up the curve like that. It's kind of what if that is a stable state of the curve, that's going to roll up like that. I'm just not sure it is going to stay that way. I just think that we could get a period of a couple of months where it kind of wants to calm down a bit. Right now that Ethereum's had its knee-jerk move back higher, you know, it was really the downside volatility that created this big dislocation between the two of them, where Ethereum was just melting to the downside. Right now that we're kind of just in a more healthy bull market, it looks like in crypto, and we're making new highs on Bitcoin. As long as Ethereum doesn't just decide to do another 50% in a week, as long as the kind of short squeeze element is gone now, and it's just going to kind of track Bitcoin in both directions, and let's say that the bull market continues, then I think there's scope for that trade to work out, basically, right? So that's kind of the logic behind why it might work. You know, just thinking that Ethereum's had its kind of catch-up outperformance move. I know it's still got a lot of catching up to do if you look over a long enough time horizon, but I'm just not sure it's going to manage that. But I think the near-term risk of like really, really major outperformance of Ethereum, I think that might be done for now. And a way of, if you agree with that, then a way of playing it is to fade that kind of medium-term vol spread, in my opinion. All right. That is kind of where I'm at in terms of crypto vol this week, and my thoughts around it. Obviously in the Discord, I have shared some trades that we're up to, like call ratios that we restructured, that we were using to lean bullishly, and also our crypto vault systematic strategies. There hasn't been too much action in those actually, but obviously there'll be updates for all the members in the Discord around those strategies later on as well. All right, guys, thanks for watching. I'll catch you next time. Hi everyone, thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.